Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, it's been a pretty wild ride for the Australian dollar after climbing to the highs of early March at 66.79 in the European session. Prices plummeted and took on at least 1.5% losses to a low of 65.65 before a bid tone returned to recapture the 66 handle. It is assessed from the recent highs, and while the market seems somewhat a little bit weaker into today, is that I believe that we are looking back towards 65.75, and I hold that view down to 65.40 or even down to 64.70. This market is slightly overstretched its rally and therefore warrants a pullback. So let's see if the market can continue into today and give back the gains from the rebound and head lower. Now, some of us may be questioning, have we seen a high posted in the euro after taking out the 109.95 level? One aspect is that the dollar index, which measures the greenback strength against a basket of 6 major currencies, posted a low of 98.74, but hasn't taken out the support level of 98.30. Therefore, we could see a slight extension to the upside, but towards 110.55.65 is where I believe the market will cap and turn around and look back towards 109.75 and lower down towards the 109 region. The dollar yen also is still remain capped at 108.15.25, and while we continue to coast our way in over the last 6 or 7 days, is that we should see a rejection from there and look back towards eventually to 107.25 and lower. The pound still choppy, and I'm still going to refrain from any call at the moment because the market is just still not quite giving away any indication of a firmer trend to put in play to either down to 120 or up to 124. We're right in the middle of it, so I'd rather sit back for the moment and see how it all plays out. Now, I do notice that the dollar CAD has slightly been a little bit reluctant in heading lower after we recently saw the break of 138.5. Nevertheless, we have got a trend from the ADX and we're still maintaining quite a bearish stance. So I'm still holding a view down towards 136.40 area and then get a rebound. But I will say that continue to adjust your stop losses or take profits in accordance to your risk management in the event we get an unexpected rebound. The gold price action plummeted overnight and through the level of 1,698, but recaptured its momentum quickly from there after posting an intraday low of 1,693. It is assessed that unless we get a break above 1,725 to reinstate the upside, is that we still got, I feel, further downside risk and could see another challenge towards the lower side of the range and maybe on to the 82 to 84 or 70 area. Finally, this hanging man is showing a little bit more potential to the bear case, and therefore a break of 30.60 would give further extension to the downside and look towards my call as a potential buy zone around 25 to around 28. A little bit wide, I know, but because we haven't seen a pullback since the break or the rebound from the $12 to $14 area and the cap coming in around 34, is there's a little bit of free play here. So let's see if the market takes out 30.60 first and then looks to 29.40 as the first target, reassess from there. I'm not bearish though. This is a correction from the top side for a pullback before the next rally up to 36 to 41. That wraps it for today. Thank you very much for joining me, and as always, look out for the intraday report, and I hope you enjoy a great start to this new day.